AI is everywhere, from your phone to your job to your investments. Every CEO out there is shouting out AI this, AI that. But here's the uncomfortable truth that you might not know. The AI boom is one of the biggest financial bubbles that we've ever seen since the dot-com era. Companies are throwing billions of dollars into AI companies without clear profits. Valuations are skyrocketing based on hype, and the same 5 corporations keep the entire system alive. In this video, I'm going to be breaking down why AI is a bubble and how these companies are keeping each other alive and what it means for investors, the economy, and the workers. Let's go over the hype first. The hype started fast. ChatGPT exploded, every company added AI to its pitch deck, and overnight valuations doubled. Venture capital firms that ignored startups for years started writing blank checks to anyone that added AI to its pitch deck. Most of these companies don't even have a sustainable business model. They're running on investor money and cloud credits. It's the same story that we saw during the dot-com bubble, when companies didn't need profit, just potential. Back then, everyone said the internet is the future. Today, it's AI is the future. And don't get me wrong, both of those statements are true. But that doesn't mean every AI company out there will survive this space. Now, their survival is dependent upon the AI money loop. And that is the reason why the bubble keeps on inflating. OpenAI spends billions training ChatGPT models. And where you ask, that's on Microsoft Azure servers. Microsoft invests in OpenAI, then integrates into Office, Bing, and Windows to boost its own cloud numbers. And Nvidia is the one that sells graphic cards to both of them, driving up its stock price, which investors use as proof that AI is booming. AI companies aren't earning money from consumers just yet. They're earning money from each other. It's like playing musical chairs with trillion-dollar companies. Everyone's spending money on each other so the next company in line could look profitable. And as long as the investors believe the story, the music keeps on playing. And let's not forget the cost of the problem that's associated with playing these musical chairs. AI isn't cheap. Running large language model costs millions of dollars in electricity and data center time. Just training a new model like ChatGPT 4 can cost upwards of $100 million. And in reference, the process of using it can cost even more when scaled to millions of users. That means for every AI feature added to your favorite app, there's a company behind it burning cash to keep it running. And the thing is, most of these firms are nowhere near profitable. They rely on endless rounds of funding, strategic partnerships, or stock-based compensations to survive. Now, doing all of that is fine during a bull market, let's be honest, but when interest rates are high and the investors are wanting to make profit, not promises, the weakest ones are the ones that do get exposed first. And here comes the data illusion. AI also depends on one key thing, which is data. But the gold rush for data is actually turning into a minefield. Companies are scraping the internet, using copyrighted material, and facing lawsuits from writers, artists, and publishers. That's adding legal risk to already expensive models. And if companies have to start paying for all of that data, profit margins will completely vanish. And even worse, most models are being trained on overlapping data sets. That means they're learning from the same content over and over again, producing similar outputs, and then being marketed as unique innovations. Eventually, the market figures it out. And by doing this, they're propping up each other. So how are they actually staying afloat then? By keeping each other alive. It's often one big tech giant paying another to make the numbers look good. And if any one of those pillars falters, say cloud revenue drops, or GPU demand goes down, the illusion cracks. And because all of these companies are interconnected, that might cause a chain reaction, just like what happened during the dot-com bubble of 2000. And in all of this mess, the investors are the ones that are getting trapped. But remember, bubbles don't pop when people stop believing. They pop when people start asking too many questions. If companies can't turn hype into profit, eventually the reality will start catching up. We saw it with WeWork, Theranos, crypto exchanges, and the metaverse. And AI could be next. Not because AI itself is fake, but because the money around the whole ecosystem is fragile. Now, don't get me wrong, AI is real. It's powerful and it's changing a lot of industries. But the power doesn't always equal profit. Right now, it feels like the entire AI economy is based on cross-promotion. And if that support system ever weakens, the so-called AI revolution could deflate faster than anyone expects. Now, so before you buy into the hype, ask yourself this question. Who's actually making money from AI? And who's just keeping the bubble inflated? Now, if you did find the video video helpful, make sure to subscribe to the channel, hit that like button, and leave a comment down below, and I'll be more than happy to answer those questions for you guys. If you do want to start investing and open your own brokerage account, I do have 2 links down below in the description. So I will see you in the next one. Thank you.